Hello and welcome to Profiles in Risk. It's your host, Tony Cañas. Today I have with me Mike Gulla, and I didn't ask you how to pronounce your last name, but Mike Gulla. Hopefully I'm close.
Close enough, man.
Perfect. CEO and co-founder at Adaptive Insurance. Mike, thank you for joining me today. How's it going?
Good, man. Good. It's great to be here, and it's good to see you, man. I don't recognize you without your top hat on, but it's close.
I do have it literally right over here. Um, and the glasses are my actual like
There
prescription
it is.
glasses. I don't need
Nice.
them at the desk, but like they're real glasses. Um, so we're recording December 9th, and it looks like you are in Austin.
I
Uh,
am.
so so I'm assuming that by now it's not deadly hot. It's like nice.
The conversation today, it's going to focus around climate, right? I'll give you an example of how climate is changing. It's 80 degrees outside right now, and on Wednesday it's going to be 35 degrees outside in Austin.
Oh, wow, I didn't think Austin would get to 35. That's
Oh
interesting.
yeah, man. Oh yeah, absolutely. Absolutely. So we're in our yearly pendulum swing of temperature change. So it's beautiful out today. It's going to be 50 tomorrow, so it's going to feel much different.
All right. So we always give the guest a chance to give the elevator pitch. What is adaptive insurance?
Yeah, so at Adaptive, we are an AI technology platform that is creating climate resiliency products for commercial businesses across the US. We're starting off with a suite of parametric products, which are going to allow customers to get short duration coverages for different things that are going to impact the financial resilience of their business, focused on climate impact and climate resiliency.
So short duration products. That's the part that really caught my eye. Like parametric, we've been hearing more and more about.
Sure.
There's more and more parametric options. Climate resiliency. Okay, perfect. Totally get why we need that. Uh, why short? What do you mean by short duration products, and why is that part of the plan?
Yeah, so when you think of resiliency and when you think of climate change, everybody tends to constantly lean towards catastrophic risk exposure, right? You think of events like Hurricane Helene and Hurricane Milton that happened this year, or people go to the freeze that hit Texas a couple of years ago and the impact that that ultimately had on consumers. Obviously, those are very heavily impacted by climate change, and the duration of those storms obviously was very long. But what we've seen and what a lot of commercial businesses and consumers are dealing with are actually the shifting of climate, right? So you have climate change that's causing these shorter duration impact storms, like what you see in the Midwest with the severe convective storms that are happening. You have the rain events like what we've seen on the West Coast in California and whatnot, things that have happened for a really long time. They're just happening more frequently, and they're happening at a more extreme nature and a shorter duration of time, right? That's impacting those customers. So for Adaptive, our focus is really around understanding how those duration events actually have an impact at a shorter duration on the consumer themselves.
Okay. So what does the product look like?
So our first product we're taking to market is what we call Grid Protect. So it is a power outage protection product that's intended to cover businesses from short duration power outages. So think of anything that happens less than 24 hours. The product will still cover longer duration outages, but when you think of parametrics being an actual trigger point, the trigger point of the policy will be anything that is less than 24 hours. So they can select it in a certain block of hours, and then they're going to pick a specific amount of coverage that they want to cover for if that outage period actually happens.
Okay, so the key being that they choose the number of hours.
They do.
So if I'm, I don't know, a restaurant, and an outing as short as an hour or two, it's really bad for me, right? If,
Sure.
if it's during the right hours of the day. If I'm in a real estate office, probably not a huge deal unless I was out for quite a while and couldn't get any work done the whole day.
Yeah, yeah. Yep. So the way I would think about it more is, especially as an insurance person, is think of the hours like a deductible, right? It's the cutoff point of where does the outage ultimately impact your business? Now, when you think of a short duration outage impact, most power outages that occur are actually very short in duration, right? Everybody's experienced an outage that lasts for an hour or two. What our focus is really around is an outage that actually has a significant impact to the business and a little bit of a longer duration than an hour or two, more in a block of 4 hours, 8 hours, 12 hours. What our system will do is actually help that customer understand the likelihood that they're going to experience an outage for that duration of period of time, right? Whether it's a 10-hour outage, a 12-hour outage, a 14-hour outage, our technology will help that customer understand what their actual risk exposure looks like. And then we'll correlate that against what their business does, right? So you use a restaurant as a great example. Could also use a retail shop or whatnot. We'll use their revenue range to help them understand what the ultimate impact would be during that period of time. And then that's where we'll help select and actually pre-fill some of the coverage options that they'll see when they hit the adaptive flow.
Okay. Um, what does the distribution look like? Are you looking to distribute via the agency channel? Is it direct?
Yeah, it's a good question. So the interim when we launch is going to be mainly with agents, right? Agents and aggregators are still writing a huge proportion to the tune of 80+% of commercial business across the US. The unique thing about offering a parametric product through those distribution channels, a little bit different than what I've done in my past lives at Hippo and at Esurance and other companies, is the type of products that we're offering don't actually usually have impacts from adverse selection, right? You don't have as much of the, customer base that's looking to file a claim when they shouldn't be and whatnot. The parametric opportunity for us allows us to go through those channels and access a much broader spectrum of customer. We also use our technology to help those agents actually be able to put the product in front of those customers easier, right? If you think about us actually being able to take adaptive and adaptive's products to an agent channel, that then it's available to all the agents in that channel versus us having to go out and get all of those agents and bring them to the adaptive platform to get them into our flow. I mean, this is something, as you know, right, has come out of the first insurtech revolution. There's so many different distributors now. There's so many different ways to connect to everybody's API and get our product available with, with a large number of agents and aggregators all at once.
Okay. So if I'm, SIAA or another large network of agents, why should we look at adding adaptive to our bookshelf, so to speak?
That's a good question. It's a good question. I actually, we get the question all the time of like, how do you get somebody to purchase something that's not required, right? Is it a luxury good? How do you get them to make that sale? The value proposition that Adaptive brings on the agent side, one is just the ease of being able to offer our policy, right? It's a parametric policy. It's third party data, right? So everything is driven through our technology. It's very easy to quote. It's a very fast yes or no, right? We know where we can and can't write. We've already pre-priced the entire US, so I can go into an agent's office and I can pre-quote their entire book of business for them. The value add comes from one, it's an opportunity for an agent to have a different interaction point with their customer with a product that actually brings value. Rather than me selling an insurance product where I'm trying to tell you not to file a claim because you don't want it on your record or you don't want it to count against you, like a BOP or a GL. The idea with a parametric policy is you're not going to have the choice to use it, right? When it goes and the policy becomes active, you can actually, use the product and it doesn't count against you over time, which we see is going to be a huge value proposition for the end consumer.
Okay, so that's an interesting property of parametric. So I had thought, advantages that they're cheap to underwrite, or they're efficient to underwrite. They're super simple to adjust because it's a yes or no. It happened or it didn't happen, and we've pre-agreed on the amount if it did happen, right? And what the oracle is, which in this case it's an easy one. But I never thought of I don't have to make a decision on do I file, do I not file, right? Am I better off just covering it myself than actually using the insurance because of the effect on my policy going forward? Right, on the parametric side, there would be no punishment because you have literally zero control, right? It's not like you can improve the electric coverage of your place.
And Tony, think about all the points in the transaction from an insurance perspective to the consumer perspective to the agency perspective that just become easier with a product like this. One of the reasons that we were so heavily focused, one on Power Grid being the first one, obviously from the ability to offer the product nationwide. But second, from an agency's perspective, is it just becomes a much simpler offering than what you've seen with traditional parametric products in the past, right? The shorter duration nature, using third-party data, having these trigger points that allow the consumer to get that financial resilience. This is why we market it as a financial resilient product. Because as me as a restaurant owner, if I know that my busiest day of the week and I lose power for 8 hours is going to cause my restaurant to shut down and I lose all of my revenue, that's a math equation now for me to understand what I need to make up when that happens, right? So if I'm going to invest X amount of premium dollars into a product that I don't technically need, but I know what the immediate return is going to be within 24 to 48 hours after that event occurs, it changes the dynamic of how I plan for those types of events for my business. And one of the reasons we focus commercially versus in the personal line space, as you know, right, it's much easier for us to put a product like this in front of a business that can actually calculate what the impact is. We've tried at Hippo for many, many years when I was with them to get customers to interact and share data and do different things with IoT devices, which worked really, really well. And a lot of companies are doing it now. But for the most part, consumers don't really want to invest a lot of money into the resiliency of their property, right? They want to buy a new TV or they want to buy a new couch or they want to buy a new stove or something like that. Where a business, they are actually incentivized to protect their bottom line so that they can stay in business. That's the resiliency piece of what we're trying to create as parts of these transactions.
Okay, so I'm always curious on the origin story. How did you realize that this kind of product wasn't needed and didn't exist in the market?
Yeah, so I've spent the better part of the last 20 years working in the insurance space across both personal and commercial lines. I've lived in every corner of this country and been impacted by every type of event that we see, short of a volcano eruption, which can actually still happen, obviously, in the US. And the thing for me, Tony, and I learned this heavily at Hippo, when Hippo launched, we were forced to build a lot of the technologies that we built, right? Our policy admin system that we built proprietary in-house was built that way because you didn't have the likes of like what Guidewire now has or Socotra or Uncork or some of these other companies. Parametric to me is actually at that crossroad now where the data is good enough to use, the technology is good enough to actually integrate with the data sources that you ultimately need. Consumers have been pushed so hard by the insurance industry over the last 10 years on limited coverage options, more expensive coverage options, non-renewals and cancellations and things, where the market to me now is more apt to adopt products like parametrics. There's been companies that have tried in the past. I would say the big difference for Adaptive is our focus not just on a single parametric opportunity. For us, it's building a suite of parametric products that we can make available to agents. So you may have some customers in one area that are interested in, a fire parametric product, or another area that may be interested in a wind parametric product. The idea becomes you create this opportunity for agents and customers to access the things that they want and need, right? And you create new solutions that just don't currently exist today.
Okay, so yeah, tell me about the other products and kind of what the timeline is on when they might be coming. And by the way, this one's live now.
We'll be live next month. So
Yeah,
it is completely baked. We're going live mid January. We're going to be launching 6 states across the U.S. is on the timeline right now.
fantastic.
Um, so yeah, so that's going to be great. And then the follow-on products, we have a product we're working on currently in the water and flood space. So it's a combination product that's really intended to protect against both flood and precipitation. So if you think about, obviously our focus there is to not necessarily have to compete with all the other parametric products that are out there, but actually create other opportunities for consumers to have access to different style parametric opportunities. We have a product in the wind space. We have another product in the fire space that we're working on. And then we have a pipeline of about 3 or 4 others that, I won't dive too much deep into since those are roadmapped, but ultimately still need to be built.
Okay, so water and flood basically based on precipitation.
Yeah.
Okay.
Yes. Think of
Um,
precipitation impact, right, to a business.
okay. The wind one, I'm guessing based on how much wind and for how long it affected my exact location. The fire one, I'm guessing you mean wildfire?
Yeah, so we have it is wildfire. Yes. So thanks for calling that out. And that product is actually being worked at from a couple of different angles. One of it is looking at it from the consumer angle of how wildfire actually impacts consumers. The second piece of it is actually us looking at the prevention of wildfire. In the commercial space, there's a lot of companies that focus on wildfire prevention that actually have limited access to the types of insurance products that they need to start businesses that do deforestation and other kinds of things and feedstock supply and whatnot, and biomass and others. It's a very, very complex industry, and parametrics are very well suited to cover specific interaction points in that process. So it's kind of twofold. There'll be a consumer angle with wildfire, and then there'll be the commercial angle of how we, actually help to hopefully prevent and help businesses that are trying to prevent wildfires in the first place.
Okay. And you've been working on building adaptive for about a year?
It's been close to a year. Yeah. So officially, I actually started as a consultant with the group we were working with that was kind of formulating the idea for adaptive. And then I came on board in February of this year and have started building the team here in Austin. So it's been a lengthy process, as you know, from the reinsurance side, the paper capacity side, like the market is still pretty tight on who's willing to give capacity. And I would say the biggest headwind we've had is around catastrophic risk exposure, right? Being able to separate that out and show in the numbers and show in the data and show in the pricing that while we are focused on climate impact products, we are not overtly exposed to catastrophic risk, right? Because the way that we've priced and the way that we've built the program is again meant to go after the impact of these events that are happening more frequently, not necessarily the events that are the most destructive that are causing the most amount of damage.
Okay. Interesting. Okay, so really focused on how parametric can be applied kind of on the edges of uh climate the climate change that have not been addressed well thus far.
Yeah, not been addressed well, have become harder and harder to ensure, right? How do you kind of silo off those certain pieces that you can actually spread the risk profile and spread that exposure out for the consumer? I've given this analogy to a lot of folks, Tony. I kind of look at it as the same transition the cable network and cable industry went through over the last 10 years with streaming services, right? Insurance to me is going to migrate down this similar path where you're always going to have your core product that you get from an Allstate or a State Farm or a USAA or one of the bigger companies. And then consumers are going to realize that other newer insurance products in the parametric space, like what we're building, is going to be available that they can go and then choose to purchase specific amounts of coverage for specific events that they know impact their business, that they don't have any coverage through their core insurance policy for.
Okay.
And in a lot of cases, that doesn't end up being something that is beneficial off of the core program for the consumer, right? You strip that coverage out, but it doesn't necessarily impact your premium. Over time, I actually think you're going to start to see a lot of insurance companies and a lot of rate plans and a lot of markets like the E&S market start to expand a lot more in the excess and surplus line space where consumers can access products that are technically more risky financially, but they are a lot more adaptive, if you will, when they're not, as heavily regulated as some of the core admitted products that they do have access to currently.
Hello, and thanks to the magic of time travel or video editing, you can figure out which of the two was used here. We are digging a little deeper into parametric. So what is adaptive doing that it's different from the many other players in the parametric space that seems to have really kind of exploded in the last few years?
Yeah, Tony, it's a good question, man. I would say the biggest piece for us is our focus on building a climate resiliency platform that's able to leverage AI and the most modern technologies to help really revolutionize how businesses protect themselves against climate events. right? We're starting off with our suite of parametric insurance solutions, but as we continue to build that out, we're going to focus a lot more on the resiliency of the business and ways that we can help them protect themselves against climate change and climate-related disasters that impact their business.
Okay, so a lot of focus on the overall resiliency to climate events driven by climate.
Exactly. Exactly. And I mean, you know this from just, where the industry focus has been. I mean, I've been around this business for a long time. At Hippo, we had a lot of focus around IoT technologies and ways we could help consumers protect their homes. For us at Adaptive, the idea around parametric insurance and resiliency for businesses, one is how do we actually help them understand what are the risks that they're going to see where their business is located, right? How is climate ultimately going to impact how they conduct their business interruption, maybe damage to their business if it's a major climatic event like we saw with some of the storms that hit the Southeast this year. But really a more heavier focus around resiliency in ways that they can learn to ultimately protect themselves against the things they're seeing from climate change.
Okay. Uh, Parametric has been around excuse me. Uh, for any who are new to parametric, what is parametric? How is it different from our traditional insurance we're used to?
Yes, for sure. So parametric insurance is a one-time policy, right? It doesn't go over time like a traditional insurance policy. It's a one-time policy that's set at a specific amount for a specific event, right? So I'll give you an example. If you think of a restaurant owner, if the power goes out to a restaurant for 12 hours and they have to close their door, they lose, let's call it $10,000 in revenue. So that's the policy that customer would then purchase, right? They would get $10,000 in coverage for a 12-hour outage period. And then Adaptive would actually verify a power outage at their location. And if it hits that 12-hour mark, and we determine that through third-party data sources that we use, the business would get paid $10,000. And it typically happens within just 2 to 4 days, unlike traditional insurance products where, you could be waiting 2 to 4 months before you would ultimately see that payment from your insurance company. The whole idea with parametric is it's a trigger-based policy that's very easy to access, that gets you access to the capital very, very quickly after the event takes place.
Okay. Um, and in this case, the, the for the electric one, what is the oracle to define that a payout is due?
Yeah, so when you think about how and I'll use that product as the example since our first product Adaptive's taken to market as a short duration power outage product. The idea with a parametric is really to focus in on a very specific event type that has an impact on that end consumer, regardless of who the end consumer is, right? It could be a different style product. In our case, we're talking about a power outage product because the US grid infrastructure and the impact from power outages is on a very steep incline. And those types of impacts to a business, while most people don't necessarily associate it with climate on every single scenario of when the power goes down, a huge proportion of power outages are related to climate change and impacts to the power grid because of climate-related disasters. So the idea becomes, where is that cutoff point where a business actually sees a financial impact to their business, right? If the power goes out for an hour, great. Like everybody's had a power outage like that. But when you think of instances like what happened with Hurricane Helene or Hurricane Milton or the freeze that hit Austin a few years back, or you think about just random events where, the grid overloads because of a heat wave or a deep freeze and a transformer explodes, when a business has to shutter their doors for an entire day and now they lose their revenue for that whole day, it's a different type of impact on their business. And the goal is to help them be able to financially access capital that can make up for that loss.
Okay. So parametric has been around for a while. Interestingly, I feel like I never heard about it. Even when I go to my CPCU, I swear it was never mentioned. And then I hear about it a lot more now in the insurtech era. So why is everybody so excited for parametric now?
Yeah, it's a good question, man. I actually will break it down into three separate things. So the first is really around the consumers are actually starting to feel a real pinch from rising insurance costs and dwindling coverage options on their traditional policies, right? You see this in a lot of markets where insurance companies are pulling out. Consumers are actually now being forced to go out and look for different call it non-standard styles of coverage to help protect their business for the things that they need to, protect against. The second is really around climate, right? The impacts of climate events, regardless of the reason that they're happening, there's a rise in these events, and people are actually paying more attention to them now than they ever were before. Because the impacts from climate are not just the catastrophic impacts, it's the daily impacts that we're starting to see with these types of events that are hitting the US, that are going across the country, that are causing more rainfall, more snowfall, more wind speed events, all these different things that are ultimately impacting the consumers. And the third is really around the technology advancements and the data that's now available that wasn't available 15 or 20 years ago, that allow a parametric style product to be able to utilize third-party data, which somewhat automates that insurance process a lot more than what you would see with a traditional insurance product. So those three things combined, I think, is what you're starting to see where businesses are realizing that they don't necessarily have to, have a bot policy. They have to have a bot policy, but some of the gaps in coverage in those traditional policies are starting to exist. Parametric just creates a unique opportunity for, newer style companies and insurtechs and others to actually focus on building customized products to fill some of those gaps for the end consumer.
What are the biggest benefits of adding a parametric coverage to your set of insurance?
Yeah, I would say the biggest difference between a traditional policy and a parametric policy is going to be the transparency and speed, right? Unlike a traditional product, a business knows what they get from their parametric product. They're buying a very specific amount of coverage that's based on a very specific trigger point. So in the example we used earlier, if somebody bought a power outage product for a 12-hour outage and they bought a $10,000 coverage limit, they know that if the power goes down at any point in the course of that 12-month period for 12 hours or more, they're going to get access to $10,000 in capital. Now, this doesn't replace their traditional product, right? You still need your BOP or your GL to cover the traditional insurance mishaps that people have with businesses. But the difference being is this is something where they know exactly how much they're going to get when a very specific event happens, and they know they're going to get access to that capital very quickly, unlike traditional products, which is just a much better all-around experience for the end consumer.
The immediate payout is a huge difference maker, and not having to negotiate with claims. Negotiation is not the right word. Not having to go back and forth with claims to prove that something happened, to prove how much the payment should be,
Yep.
the clarity and the speed.
Exactly. And think about from a business's perspective now, we're actually putting the business in charge of how they let that capital help their business, right? You always hear these instances in claims, right, where the insurance company is telling the consumer where they need to spend the money or how much they need to get for replacing this appliance that got destroyed in a fire or whatever the reasoning may be, right? And there's reasons that those things happen from insurance contracts and contract language and other things that have happened over time. But the idea of a parametric and being able to get that customer access to that financial capital quickly is you're actually giving them the ability to take those funds and decide how best to use it for their business. So now me as the carrier, I'm not a carrier, but assuming the entity that's paying the claim now is ultimately not forcing that customer to spend the money on a specific thing, right? Maybe they need it for a new product that was spoiled because of an outage. Maybe their doors were shut for a whole day, so they lost all their revenue. They want to pay their employees. Maybe they want to invest it into their business and they want to upgrade equipment or try to actually create some sort of additional climate resilience for their business over time by investing that money back into the business. So it creates a different dynamic. It creates a different kind of interaction point between the, insurance entity and the end consumer in a way that is just different than a traditional insurance product.
Okay. Are there any risks?
Yeah, I mean, of course, with any, like any insurance product, man, there's always a lot of risks. I think the biggest piece that I see, as a risk for us as is the educational awareness to the consumer and the understanding that a parametric product is not designed to necessarily replace their traditional insurance product, right? If you own a small business, you have to have a liability policy. What happens if somebody gets injured on your location or you have something that occurs, right? That, obviously somebody sues your business or whatnot, or in a BOP scenario where you have a kitchen fire that burns your establishment down because somebody made a mistake. Like traditional insurance products are still required. The beauty again about a parametric product though is that you can actually purchase specific amounts of coverage for things that you may or may not know actually have a very significant impact to your business over time, right? And this is the resiliency aspect of what, I've had a strong belief for a long time that parametric products can bring to the industry. But again, back to the main point. I mean, that's probably one of the bigger risks is just making sure that the understanding and awareness of what it's intended to do is a piece that is, kind of forefront when the conversations are being had with the end consumer.
Okay. Um, are there businesses for which parametric is not a good fit?
Yeah, I mean, like most things, I think there's always an opportunity where parametric, I think, can actually fit for, any type of consumer. It really just depends on the type of parametric product that they ultimately want, right? Because parametric products are so customizable, they can be designed for a number of different things, right? You can think about anything from travel insurance and the way that works to crop coverage and crop yield to what we're trying to do for businesses on more short duration impacts, business interruption, and those types of things. So there are parametric products that exist that are not a good fit for small businesses, which is the reason why for us with Adaptive, we're actually focused on trying to figure out what the needs of the end consumer are so that we can customize the parametric products to things that are going to have the most amount of benefit and impact for them and for their business.
Okay. The beginning of what I call the insurtech revolution, so about the last 10 years, a lot of the talk, uh, especially from the first set of insurtechs, was a lot about disruption, a lot about completely and radically changing the industry. And now it's a lot more about complementing, giving us better technology, better products, etc. More like a partnership. Is the evolution of parametric similar? Like was there a time where we thought parametric was going to take out the traditional insurance, and now we see it more as a complement?
Yeah, it's a good question, man. I think the bigger piece for me is that the first insurtech revolution, I think, has really enabled what's going to come from parametric products. And what I mean by that is, I was part of the first insurtech revolution as a, early employee at Hippo Insurance, right, which was a very successful startup in the home insurance space for insurtechs. And, one of the things that I think was most impactful from the first insurtech revolution was really around distribution and data, right? Everybody thought we were going to revolutionize the underwriting models and we were going to change the way pricing worked and all of these different things. And what it turned out happened, in my opinion, was we created an opportunity to grow really fast, right? You have all these new ways to put, customers in front of different insurance products. You had all these different data sources that we were using to try to understand the risk profiles, but the underwriting results didn't really change much. Actually, they were a lot worse for a lot of the insurtechs than they were for the traditional players. And it just turned out that, these companies that have been around for hundreds of years have hundreds of years of data and learning that they know better than a lot of others do. But what it's led to for parametric products now is you actually have the distribution opportunities now that you didn't have 10 years ago, right? All of the different distributors and agents that are across the country now that offer each other's products. Everybody has a better understanding of what's available and what's not available. And people are starting to pay closer attention to the gaps that are being left by these traditional products. This is where I think parametric can come in to fill the void. I don't think it's going to disrupt anything. If anything, I think it's going to augment current policies. I always give people this example, Tony, of the cable industry when streaming services came along. Parametric products to me are like streaming services. It gives somebody an opportunity to purchase the select coverage that they want for a very specific thing, just like I could purchase Netflix because I have some show on Netflix that I like, but I don't necessarily have Amazon Prime because I don't need it because of what they have isn't something I pay attention to. It's a similar scenario, so I think it remains to be seen how it's all going to flesh out in the InsurTech Revolution 2.0 that I think we're just now starting to see.
Hey, what does the future what does the future hold for Adaptive?
Opportunity, man. Our opportunity. I'm really, really, really excited about where the insurance industry is going to have to head over the next 5 to 10 years. There's been a lot of strain on the insurance market. There's been a lot of strain on the reinsurance markets. There's a new, administration coming into the federal government in a couple of weeks now. There's going to be a lot of things coming around climate and climate impact to the industry. There's going to be a lot more private sector money put into, I think, what we see around climate change than what you're going to get out of the federal government, which isn't necessarily a bad thing if it ends up moving things, much, much faster because it's private capital versus federal funding that you're going to see, driving a lot of insurtech and climate tech style initiatives around climate change. So for me, it's just a tremendous amount of opportunities for us to finally be able to help consumers better understand their climate exposure. There's going to be a big shift on more proactive versus reactive in the insurance space. We've seen it for the last couple of years, but consumers are actually the ones that are now starting to pay attention to it because they're feeling this big pinch, both on the cost side of their insurance policy and then the lack of coverage that they have on those policies in a lot of cases. So for me, I just look at it as a huge opportunity for the industry to come together and come up with new solutions that ultimately have a very good impact on consumers.
All right, definitely a new products that are designed around evolving needs are a good thing
It
for
is. Yep,
our
it
industry.
is. And I'll end on, one thing I hope for, and I know you know this from the recruitment world, is that it actually brings a new subset of talent into the insurance space, right? If we can combine more around climate and climate resiliency and data modeling and everything else, it's adding a new subset of folks into the insurance industry that hadn't been there, or I don't want to say haven't been there, like actuaries have been around for a long time, underwriters have been around for a long time, but new styles of data thinkers and ways that data can impact the insurance space. To me, I've worked with a lot of people over the last, 2 years that I've never worked with in the insurance industry before. That's got me excited about what that's gonna bring into the environment.
Awesome, exciting. Thank you so much
Awesome.
for your time today.
Yeah, thanks, Tony. I appreciate it, man. It's good to see you as
Anytime.
always.